Welcome everyone to Crop Insurance Education for Every Farm. We have offerings available on basic crop insurance education for row crop producers, livestock producers, and specialty crop producers because every farm deserves a safety net. My name is Julia Barton. I am the Farmer Services Director with the Organic Farmers Association. I'm also an organic farmer located in Northeast Ohio. I wanted to mention before you dig in that there is some repetition in the various offerings for different types of producers. Some of that is because some of the programs are interwoven and some of them are available to multiple types of producers. So rather than listening to the same information more than once, if that's not a good fit for you, or if repetition is not your favorite way of learning, you have the opportunity to scroll through by chapters. And you can see at the top of the page here what that might look like. So there are different sections of the presentation that will be named at the top, and you can scroll through to learn about what is most relevant to you and your farm. So easily skip around and learn what you need to know. If you have any questions, please reach out. Be happy to try to answer them or connect you with someone who can answer them for you if I cannot. All right, here we go. Hello and welcome to Crop Insurance Basics for organic livestock producers, because every farm deserves a safety net. My name is Julia Barton, and I serve as the Farmer Services Director for the Organic Farmers Association. We are grateful to be partnering with Oregon Tilth, Pennsylvania Certified Organic, MOSA Certified Organic, and NOFA New York Certified Organic in providing crop insurance education for farmers. This work has been funded and supported by the Risk Management Agency of the U.S. Department of Agriculture. What to expect today. First of all, why you should care about crop insurance, organic crop insurance specifically, a little bit of crop insurance background, some options. And while we won't have discussion today, I do welcome any questions or comments that you might have. You can please feel free to email me at julia@organicfarmersassociation.org, and I'll be happy to find out the answers and circle back with you. Why should you care about crop insurance? Well, the good news is that you don't have to take my word for it. Does everybody here remember Reading Rainbow? This was one of my favorite television shows as a child. And you might remember when LeVar Burton would talk about a book and then he would say, but you don't have to take my word for it. And he would pass it over to one of his young colleagues who would then share about their favorite books. I'm going to do the same thing, only I'm going to be passing it over to members of our crop insurance work group, at least to their words. So we've got quotes from farmers and ag professionals who are part of OFA's crop insurance work group to share with you their perspectives on crop insurance, including why you should care. So here's a quote from a Midwest Extension employee who works with small and mid-sized farmers, who's a part of our group. Mainstream farmers, she says, will say that the most important part of the Farm Bill is the safety net. I began to question that through my work with small and mid-sized farmers when I realized they don't get insurance. These policies are made for certain farmers growing certain crops, and in our case today, producing livestock in certain ways. Another quote, I hear a lot of abuse of the crop insurance system by some larger farms. I think that's one reason why some of the small and mid-sized farms don't go after it. But at its core, there's just a lack of knowledge. So in the face of extreme weather events, consolidation in land and markets, and the desire and the need for farmers to be able to farm another year to feed our communities, a safety net for every farm is really essential. And as our work group member noted, a lot of folks don't have a ton of information about various crop insurance policies that could work for them. So we're hoping to close that gap just a little bit through some basic information about some policies that may be useful to you and a little bit of background regarding how crop insurance works. Here she shares, there are barriers not just to crop insurance, but to accessing reliable and credible information about crop insurance. So we'll hope to close that gap a little bit here. Now we'll cover some crop insurance background. So here you can see a map denoting organic farmer participation in RMA programs. So we can see that the darker colored counties are those where there are a higher number of crop insurance policies, and the lighter or grayed out counties have maybe no policies recorded. So certain parts of the country, there's a lack of use of risk management agency crop insurance programs. And in some other parts of the country, perhaps where the programs are more designed for the growers in that region, or perhaps where there's more outreach, there's greater use of these programs. So we're hoping to spread the word about programs that may or may not be a fit, so that folks can make that very personal decision on their own farms. Broadly, at the 500-foot level, how crop insurance works is as follows. It's purchased at a subsidized rate, so part of the crop insurance policy is paid for by taxpayers. All of us are paying for it. It's sold through private insurance companies by agents. So those are the folks that are going to gain you access to the actual policies. There are different options for different scopes of production. And there are also extra options that might not be written down currently, but that can be negotiated should there not be a product that works for what you're hoping to insure. Those are called written agreements, and we'll get into those in a little bit more detail later. Accessing crop insurance can be tricky, and we want to make sure that you know that you have options. So there is an RMA agent locator on the web at USDA. If you don't have access to the web, you can also call our OFA helpline and we can help connect you to this information. But there is a website with a locator for risk management agency agents, and also a whole farm revenue protection and livestock agent locator. So those would be folks that have experience doing those types of policies. And then you can kind of check them out, have conversations with them, communicate with them, and see if it might be a fit for you. I would say choosing a crop insurance agent is similar to choosing a certifier. You want to make sure that it's a cultural fit. You want to make sure it's somebody you can work with, and you want to know that you're going to be in close communication with them ongoing. So take your time and find somebody who seems like they're educated in what you need them to be educated in and willing to work with you and learn alongside one another. So let's talk about some crop insurance options for organic producers. Whole farm revenue protection is one that we want to note here. This program was born out of the sustainable agricultural community. NSAC, the National Sustainable Agriculture Coalition, worked very hard to get this into the Farm Bill, and it has had several tweaks over the years. The reason we bring this up in a livestock crop insurance presentation is that it is designed for diversified operations. So folks that might have both crops and livestock, or different types of livestock, or other stacked enterprises, say maple syrup, or some other value-added product, might engage in this form of crop insurance because it is a revenue program that covers up to $17 million in insured revenue. Here's a quote about whole farm revenue protection from one of our work group members, Scott Myers. I have a lot of experience with crop insurance. When we decided to transition to organic, our agent was telling us about whole farm revenue policy. We quickly realized that in organic, we were significantly unprotected. It was a paperwork nightmare. We weren't getting insured the way we needed to. It was a mess. We eventually went back to using whole farm revenue after I was made aware of some of the changes that were made. We're about 3 years in at this point, and this time around, the process has gone much smoother. So there's some good news about the changes that have been made to whole farm revenue protection over time. So whole farm revenue protection insures based on the whole revenue of the operation rather than on yield history, which is common in some other forms of crop insurance. It does include replant coverage for annual crops, and it offers a range of coverage levels from 50 to 85%. And as we noted, there is an agent locator because there are many agents that are not familiar with whole farm revenue protection. So it's important to be able to find somebody who knows what they're up to with this product. Speaking of someone who knows what they're up to, this is Noah Went, another member of our work group. Noah's on the right there with his business partner. And he notes that whole farm revenue is something not many insurance providers know enough about. Noah goes on to say, Noah being both an organic farmer and a crop insurance agent, writing a whole farm revenue protection plan is not worth the agent's time. I do it because it's the right thing to do, but it's not something I get excited about doing. There's no support for it. Whole farm revenue protection has a higher rate attached to it, but if you work with a small farmer who, because of volume, doesn't generate the same income potential, then the fiscal incentive isn't there for the agent. So that kind of notes a challenge with whole farm revenue protection. Another reason to really utilize that agent locator and think about working with someone who has specialized in this type of plan. And here we hear from Scott Myers again. Crop insurance is supposed to allow us to farm another year. It's not supposed to guarantee us a profit. When I buy car insurance, I don't insure it so that when I have an accident, I get a better car than I had before. I just get it to have wheels to drive. Whole farm revenue protection is designed to make sure I have wheels. So the way that whole farm revenue protection works is as follows. The information listed here is gathered up by the farmer, and then they would use that whole farm revenue protection agent locator to find an agent. If it looks like it's going to be a fit, one can purchase the policy. And then if an extreme weather event or a loss occurs, if the revenue for the policy year is below the insured revenue, farmers need to submit a notice of loss within 72 hours. And then a claim would be filed within 60 days after submitting farm tax forms to the IRS. MicroFarm is a sub-program of the whole farm revenue protection that's oriented towards farms with up to $350,000 in insured revenue. It does work pretty similarly. It is designed for smaller diversified operations, and it works to try to minimize the paperwork a little bit that is involved in whole farm revenue protection. So we'll just leave that here. But if folks are interested in MicroFarm, we can go into more depth at another time. Here's an example of MicroFarm and where it might be a fit. So Jill and her family run a small CSA. In addition to the CSA, they raised pastured poultry, and they make jam out of a 1/4-acre raspberry patch. MicroFarm would enable Jill to insure the revenue from all of these enterprises in one policy. As you can see here, both specialty crop insurance for our colleagues who grow a variety of specialty crops and whole farm revenue protection participation have grown over time as there have been changes and improvements made to the offerings of these policies. Both of these are newer than, say, the multi-peril crop insurance, which has been much longer standing. So pasture, rangeland, and forage insurance is probably what I've heard from organic producers to be one of the better fits that exists for crop insurance for organic and sustainable producers. It is useful for transitional, organic, and non-organic producers, so anybody can utilize this type of insurance. And it's based on a rainfall index rather than on actual losses. Utilizing moisture as a predictor of yield. So NOAA, or the National Oceanic and Atmospheric Administration, has a grid system which then utilizes the rainfall index to determine precipitation amounts within an area. And insured acres are assigned to one or more grid areas based on the location. So producers, this is a beautiful thing about this type of insurance. Producers do not need to file a claim or submit documentation for a loss within a certain time period. Payments are made after rainfall data is collected and shared with RMA for each 2-month index interval. So if there's, say a dearth of rainfall, the farmers are cut a check based on that NOAA data. And from what I hear from people is that this works pretty seamlessly. There's also livestock risk protection insurance. This helps a livestock producer lock in pricing to avoid market price fluctuations. There's coverage ranging from 70 to 100%. And at the end of the insurance period, if the actual ending value is below the coverage price, then the farmer is paid an indemnity for the difference between the coverage price and the ending value. Is the way this works. I do not know any organic farmers personally who are utilizing livestock risk protection, but we wanted to make you aware of it so that you know it's an option. There are different types of livestock risk protection insurance. So there's one for feeder cattle, which is noted here, and coverage is available for various classes of cattle, as noted. And as you can see, these products are geared towards larger producers. There's also a livestock risk protection program for swine. Again, very large numbers here, annual limit of up to 750,000 hogs per producer for each crop year. And then length of insurance coverage is in weeks, so determining, weeks of production. Similar model to the previous one we discussed. So actual ending values are calculated by the USDA and posted on the RMA website at the end of the insurance period. I do not know any organic producers who are utilizing this for swine. There's also livestock gross margin insurance, which offers protection against the loss of gross margin on cattle. Gross margin being the market value minus the feeder cattle and the feed costs. So this uses future pricing to determine the expected gross margin and actual gross margin. It does not, however, insure against cattle death or unexpected increases in feed use or multi-year increases in feed. And this is set up such that there would be an indemnity at the end of the 11-month insurance period, which would be the difference between the gross margin guarantee and the actual gross margin. Again, I do not know any organic producers who are utilizing this insurance, but if anybody is out there doing that, would love to hear from you. Love to hear your feedback. There is also a dairy revenue protection insurance, and it helps protect milk prices in a similar way to the LRP, which we talked about, the livestock revenue protection, which would protect against an unexpected decline in revenue resulting from yield and or price. My understanding for this type of insurance is that while it serves conventional dairy producers, it does not serve organic dairy producers in many circumstances because it is not designed for organic producers. It is based on conventional prices, both costs and pay price. So we have a very active working group at Organic Farmers Association on dairy, organic dairy specifically. And this group has identified the need for a safety net for organic producers and has made some progress on that front. So US dairy pricing is very complex for conventional producers, and as we discussed, is not designed for organic producers. But a coalition of folks, joining together and born out of OFA's work group, work together to create the ideas behind these two marker bills. So the Dairy Act, which was introduced in the 118th Congress, focuses on data collection, investments in infrastructure, and a safety net proposal for organic dairy. And then a sort of sister bill is the Organic Dairy Data Collection Act, which was on the House side. And this focuses on data collection analogous with what is done for conventional dairy. And the hope being that out of that, potentially a safety net could be born. We were very happy to see this included in both House and Senate Farm Bill draft language. And we're very hopeful that collecting data on organic dairy market will help programs work for organic producers and increase stability for organic producers down the road. So grateful for these farmer-driven solutions that are hopefully going to be part of a Farm Bill process here forthcoming. Also wanted to touch on crop insurance for transitional producers. So producers who have crop insurance coverage on crops in transition to organic are eligible for premium assistance from USDA. Say a transitional operator receives a premium for a transitional crop, one can use the contract price options to insure the crop at that contract price. But in order to be able to receive crop insurance at organic rates or transitional rates, the transitional grower needs an organic systems plan or a transitional production plan, or a TPP. And one can work with a certification entity in order to review that organic systems plan or that TPP in order to receive crop insurance. So there are some links here about accessing certifiers who can help with that. And again, if you run into any trouble, do give us a call on our helpline and we'd be happy to connect you. Also wanted to touch on NAP just for a moment. NAP is the Non-Insured Crop Disaster Assistance Program. This is not crop insurance, but it is often part of a farmer's risk management calculation. And there is sometimes confusion about it being crop insurance, so we wanted to make sure to cover it. This program is not run through the risk management agency. Instead, it is run through the Farm Service Agency. What NAP does is provide financial assistance to producers of non-insurable crops when there is a natural disaster that results in low yields, inventory loss, or prevents planting. It's important to note that farmers can participate in whole farm revenue protection and microfarm and still participate in the NAP program. So it can be part of a layered risk management plan. It's also important to note that beginning, limited resource, socially disadvantaged, and qualifying veteran farmers are eligible for a waiver of the service fee and a 50% NAP premium reduction. So please do share that news with friends and colleagues to whom that might apply. Here's a brief NAP example. So Rhea was growing, raising bees, maybe to pollinate her strawberries, who knows. She experienced a loss to her honeybee colony due to a hurricane. So NAP would cover the loss of income to Rhea for her honey, but it does not cover the loss of the bees. So she would need to reinstall the bees on her own. That is it for our livestock crop insurance presentation. I would be grateful if you would use this QR code to provide us with feedback. That's very helpful to us. And I also just wanted to invite you to be a part of the types of farmer-led policy solutions that we discussed here to potentially create a safety net for organic dairy. We have other work groups that are working on various topics, including crop insurance, National Organic Standards Board preparations, working with the Natural Resource Conservation Service, risk-based certification, organic imports, and solutions to clawback situations. So we'd also welcome your suggestions about, the need for potential work groups, and you can sign up here on the QR code. You can also reach me at the email at the bottom left-hand corner of the screen there, julia@organicfarmersassociation.org. Thanks so much for your time and attention, and please do let us know if you have questions.